Hello, fellow traders. 'Tis I, the Rumpled One. I hope you like the new intro screen. I was just messing around. Anyway, all it takes to trade is a horizontal line. Or as I've started to say, trading is simple when you use horizontal lines. Let's get on with it. Okay, here we have a live chart. 1 minute chart, the euro. Once again, price is the same. Doesn't matter what charts we have. So each candle here is a minute candle, the black and white candles. But you see the red green? That's the M candles M indicator that I modified. So you can see we've got it set for a 60-minute time frame, and we shaded it red and green, green up, red down. So what we want to do is, using the rule of thumb, you only trade in the direction of the H1 candle. Don't go against it. Once again, we're using M1. We're using live charts. And we can see if we can make any money doing this. Now, starting here, had we taken the trade at the line, we may have made 2 or 3 pips. Once again, maybe 4 or 5 pips here. You see here there would have been some pullback. Now people would ask, well, where's the stop loss? Well, if it's going across this line and comes back across it and it crosses this line, if you want to trade in the direction of a line cross, wouldn't it be obvious that the stop would be here? That's what I always say. But you see here we've got a lot of choppy price action on the euro. Now, rule of thumb, don't trade against H1, but you don't want to trade against D1 or W1 either. So this is the TRO multimeter candle color indicator that I've posted for free, and it's been downloaded probably 10,000 times. Because see here, you can see the candle colors on all the different time frames. So when the daily and weekly are in agreement as well as H1, that's pretty strong. So, but if you're an experienced trader and you think you know better, for example, right here, you could have taken this trade short and picked up 10 pips because it crossed the line. Because price can only do a couple of things. It can come down to the line or up to the line and then bounce off it, hit it in reverse. It can come through it and reverse, or it can come through it, cut through it, and keep cutting through it. That's it. That's the only thing price can do. So that's why trading is simple when you use horizontal lines. So once again, you see here, here's the open. We came up, it went up, maybe a little bit more, a little bit more. You could have stayed in that trade, because if you would have put your stop loss here, it never would have triggered. What you have to understand, fellow traders, is it takes time to make money. And so here, had you gotten in this trade here, it would have taken you about an hour to exit with 10 pips. And that's just something to understand. Also, remember, you are working against, on MT4, you're working against a deal desk most likely, and there's a spread involved. And sometimes that spread can be pretty big. And so in fact, what I did was I wrote an indicator called the spread alert. And it tells you what the spread is. And since they don't keep the bid and the ask in the data, this is all live. So it'll keep track of the minimum spread, maximum spread since you open that chart, and also the minimum ask. Because if you press F8, you can show the ask line. And it'll be right there as a red line, and your bid is a black line. So you can find out what that minimum ask was since 2013. Why minimum ask? Because that's the lowest price you could have bought in at. Even though the bid's lower, you can't buy at that price. You have to pay the ask price. Unless you're at a broker that allows you to use limit orders. Now, of course, on a lot of the MT4 brokers, if price is down here, you could put in a limit order to buy here. But as you can see, that wouldn't have worked out too well. So once again, you want to trade in the direction of the line cross, even if you don't consider candle colors. Once again, we could turn this into a 5-minute chart and see how it works. So once again, D1 was green. So if we would have taken this trade right here, you could see we could have been sitting in that trade probably till somewhere around here. Should be obvious. But once again, people always ask about the stop loss. And I tell them stop loss is a function of risk and position size. But the problem is you don't want to calculate your stop loss. You want to know what your stop loss is ahead of time based on what you see on the chart. What you want to calculate is the position size. And you see I got a spread alert, and then because I want to alert if the spread's below 2. And you see here we had a minimum spread of 1.9. So we can actually move on up to the 15-minute chart because price is the same. We can spread it out a bit. So now we're looking at the 15-minute candles inside the H1. Once again, you could have taken the trade here, staying with the D1 candle color. Now, just to prove to you I'm not cherry picking, let's look at the dollar yen. And let's see if it works. Well, it looks like the dollar yen was in a fall here. But once again, you could see D1. Okay, that looks too easy. Let's pick Euro yen. Okay, there's some choppy action here. So, we've got a red D1. So, we would never enter against it. We'll see right here, had we entered with it, looks like we might have gotten stopped out because it reversed. Here would have been profitable. But here, going south with the line, going with D1, with the H1 and the D1 in agreement, could have made some 10 pip trades there. You see that right here again, here again. So, and these lines, this is just the sweet spots gold indicator that I modified. It's showing you the line every 10 pips. And if you want to, we can just go right to the hour candle color, and you can see that the M candles indicator that I modified goes away. So now we're looking at white candles, bull candles, black candles, bear candles. Let's pick a different pair. How about the pound dollar? So once again, D1 green. If we go long at the line, you can see what happens. Long at the line. If you just woke up here, long at the line. Because we're going with D1 and W1 in this case. Let's move on to one other chart. This is the TRO trade lines indicator. Now the other one was just sweet spots gold every 10 pips. Now these lines are a little bit different. This is on M1. Let me switch over to H1 so you get a better idea what we're looking at. Okay, we've got a lot of different zones here. For example, we've got yesterday's high. If you're doing a wick zone type trade, yesterday's low. Or actually, this is today's low, today's open. So you can see here, any of these lines we can use. We've got pivots, we've got midpoints, monthly lows, we've got ATR lines. So for example, you can see here, price hit into the ATR zone. And a lot of times people use like ATR 14 or ATR 12 or ATR 5. But to me, I'm not looking for a magic number. So what I did was I wrote my ATR indicator to run a loop starting I think with ATR 2 up to about ATR 15 or 20. And of course, the user inputs can be changed. You can do whatever you want. Then it picks the minimum and the maximum, and it shades in a zone. So you see here we've got the daily open plus ATR 12, and then the daily open plus ATR 3, because this was the smallest, this was the largest. Here's the open here. So you see price came up and actually got into the ATR zone. Because see, if you use ATR 12 saying, well, if it hits there, I can trade reversals, you would be missing out. But see here, it enters the zone, now it's exiting the zone. Almost like a daily wick zone type trade. So once again, we'll just trade. We'll trade in the direction D1, and we can take a trade at any of these lines. See, here, if we traded here, maybe we would have got in. I don't know where you would have put the stop, because that's up to you. I mean, you might say, okay, if it comes down to this line, but what would make sense? It would make sense to me that I would stay long at least to the daily open, okay, which would be here. So maybe between we got 4. That's only 7 pips. But if I wanted to trade tight, that's what I'd do. But I would have been stopped out here. Second time around, would have had success. I probably wouldn't have put in a stop that close. Maybe I'd say, okay, well, let's see. Maybe we'll try the weekly pivot because it tested it once, tested it twice, and broke through a third time. So I would have set my stop at the 37.29 level. I'm going in at 47. So maybe round it up to 20 pip stop. So 20 pip stop, I know my risk, I calculate my position size, I enter the trade, it takes a while, and it goes up. So once again, it's very simple trading when you trade, or trading is simple when you trade with horizontal lines. You take the trade in the direction of the cross. If you're a beginner, you make sure W1, D1, and H1 all agree. And in fact, what I did was, because some people had a hard time with that concept, I wrote what I call a trading wheel or training wheels indicator. And so it'll just tell you how you can trade. So depending on the pair, see, it'll tell you which direction. You saw it said wait. Sometimes it'll tell you to wait. For example, right here, because the parameters are saying you have to wait. You have to wait for price to move so you know which direction to trade. So that's the TRO training wheels DW indicator. Also have, that has the weekly. The training wheels just has the daily. So that's to help the beginning trader or the experienced trader from making those mistakes. Because if you saw or one of my videos, my book reviews, I might have put it in a trading video too, that algorithms beat individual traders every time. So if you have the computer do the work for you, you don't have to think. You just have to react. You just have to take the trade. But it doesn't matter because it's not what you trade, it's how you trade it.